Yeah, so we're going to let people join. There is more people that are coming, so we'll start at 7 sharp. So this is my first webinar. This is Fight first webinar as well. So we prepared as much as we can, and now we're getting used to Zoom, but we're trying this new format. So if there is some technical issue or if the presentation is not 100% smooth, just bear with us, and we'll carry forward. But no, we are super excited, me and Faye, to do this webinar. So really, like, one of the reason me and Faye team up to help our real estate client is to like provide very high quality of service. And in today's world, where there is so much information available on internet, and you can have contradicting information. So when there is so much information available, we really believe that our job as your mortgage advisor or real estate advisor is to tell you the important information that are relevant for you to make the best decision. So really the foundation of our relationship and the way we work with our client is really to provide quality information that are going to help you guys make the best decision. Yeah, so more people joining, that's great. So just so you know, guys, so this webinar is recorded. So if you don't want us to say your name, you can say it in the chat. The recording doesn't show who is attending, so it's kind of anonymous. But if you ask question, we're going to see it, and I'm going to say your name. We're going to put this webinar on YouTube afterwards at some point. So yeah, it is recorded. All right, more people joining, close to 7. Yeah, so I hope everybody has a chance today to enjoy the nice weather. I was so happy to see, like, I think it was 16 degrees today, something like that. This morning I actually started working on my laptop in the backyard, like kind of studying a little bit. So I'm still not as tan as Fahid. I'm getting there. I'm still like a little bit white, but definitely a little bit more tan than yesterday.
Yeah, definitely. It's the start of the, it's actually April now, so the weather is definitely getting much better. And hopefully the lockdown, once it's over, then, things will come back to the normal. So people can appreciate yeah.
Yeah, finger crossed. Yeah, I heard they're a little bit ahead of schedule in terms of vaccination, but we'll see. Like, because sometimes they say it's going too slow, sometimes a little bit faster. So we'll see. So yeah, it's 7. So once again, thank you everybody for joining. As I was saying a little bit earlier, so it's our first webinar for me and Fahid. So we prepared as much as we can, and hopefully there is no glitch or problem, but if there is some, bear with us. Also, so the webinar is recorded, and we're going to put it on YouTube at some point. So if you miss some part, you can have access to it later. So yeah, so I'm going to introduce our guest today. So Fahid, thank you so much for joining me today in this webinar. So Fahid is a home. So they changed the name at Scotia. He's basically a mortgage broker, but how do you? What's your title again? Home advisor.
So yeah, it's home financing advisor at Scotia Bank. So the idea is basically to integrate, like other products as well, including mortgages, when we're trying to have the conversation with clients. So that's sort of like why they have this title, which is basically a mortgage specialist. But yeah, home financing advisor.
Home financing advisor. Yeah. So basically, Fahid is the guy that can help you get approved for your mortgage. And even if you're not a Scotia bank, like, you can get your mortgage to different bank. But he's the guy that can help you secure like a mortgage. And so today, what we're going to talk about is what's happening in today's real estate market, how to get finance. So what kind of documents you need, what's the process, how long it takes, and then we'll talk about like what's happening in the market. So if you guys are following the news, you're aware that we are in a very fast-paced real estate market, and from 1 week to another, from 1 month to another, depending of what's the news, what's happening with the COVID, what's happening with the regulation, the market is shifting very fast. So we'll dig into that. We'll look at basically the past year, where we are now, and maybe where we're going in the future. And we're also talking about interest rate, and that's Fahid that would cover that. What happened in the past, where we're at, and where we're going. So for those of you that are just joining, one core of our business of me and Fahid, and the reason why we work together is because we really believe that information is key. And this kind of webinar is to give you guys free information. And for you guys that are joining, good job, because getting information is already like half the way. So let me load my presentation here. All right. So I'm sharing it on this screen. Share screen. Perfect. All right, so you guys should be able to see my screen. If it's not the case, let me know. So let's put that here. Okay, can you guys see my screen? Can you see my screen, Fahid?
Yeah.
Perfect, amazing. So let's open that. Yeah, so an educated approach to real estate. So that's why we're discussing information is key. So kind of our philosophy, mine, and I know Fahid shares some of it. So our goal is to educate clients, to give you information that helps you make better decisions. We are relentless to grasp any opportunities available for our client before anyone else. And I kind of want to share a story with you guys. So I had a client that were looking to purchase a condo. It was an investment. And she was already working with another mortgage broker. And 1 week prior to the closing, she called me. She said, "Hey, Thomas, I know the closing is coming soon, but my rate is," I think it was 1.9 something. And, like I know like out there, you can maybe get better rates. So do you think I should go elsewhere? Do you think I have time to get better rate? And I said, okay, you know what? I know a mortgage broker. His name is Fahid. Let me put you in touch with him and see what he can do for you. And what happened is that Fahid, within the week of the closing, worked really hard to get her approved for that property at a better rate. What was the rate again, Fahid? I don't know if you remember.
Yeah, so we actually closed that deal, I think about 4 weeks ago, and it was actually 5 days before the closing date when we started working with the client. So the rate actually we were able to offer at that time was, I think about 25 bips lower than the other lender. But basically each deal is a little bit different. So that's something where we are a little bit careful in a sense that it's how the markets are basically going. But in any situation, our basically objective is to whatever best we can do in terms of the interest rate, how we can basically, save in interest cost. And that was, I think, a very successful story where we were able to get a very good rate compared to like what a competitor was offering.
Yeah, and to be honest, just the fact that you were able to get a finance within 5 business days is amazing. Like I know some clients, sometimes they told me they're working with another bank or someone else. And they told me, oh yeah, I've been asking for a pre-approval and it's been like 15 days and I'm still waiting. So just the fact that you were able to do that in 5 business days is incredible. And on the presentation, like if I go back, it say we are relentless and we take initiative. And that's exactly this kind of example that kind of show how we work. So we have empathy to make sure we have a solution that works for you, because as Fahid was saying, every situation is different. Any application is different, and also depending on where you're making your move, the market might be different. So we really try to find a solution that works for you at any given time. So in today's presentation, What we are mostly going to talk about is understanding real estate financing. And then we're going to jump into today's market, what's happening, what's the difference between condo houses, how everything is behaving differently. Yeah, let's dig into rated financing. So it's going to be Fahid that's going to cover that. Real quickly, so from a real estate standpoint, let's say you're a first-time buyer. This is a first-time buyer seminar. So you guys are looking to maybe purchase a property at some point. And the first question you need to ask yourself is, how much can I borrow? Because when people go talk to me and say, hey, Thomas, I want to view some condos. I want to stop being a renter, stop paying someone else a mortgage, and I want to be a homeowner. So I tell them, are you pre-approved? Because first, the market is going very fast. So condos, sometimes they sell within a day, within 3 days. A good condo should sell within a week today. But what that means is that if you find something that you like and you want to be able to make an offer, it's an offer that needs to be without financing condition. And to do that, you need to talk to a mortgage broker or home advisor. And so basically talking to Fahid or any mortgage broker if you know someone, but if you want to work with the best, that's the first step to get into being a homeowner. So without further ado, Fahid, can you introduce us to mortgage financing and what's the steps?
Sure. So I'll just try to share my screen here.
And by the way, guys, so if you have any question, like it's a very interactive presentation webinar. So if you have any question, feel free to ask it in the chat. If you want to stay anonymous, just let me know. But if not, any question at any time, ask us, and one of us will read it and we'll try to answer on the go. At the end of the presentation, we'll leave a little bit of time as well to answer any question that you may have.
Absolutely. So are you able to see my screen, Thomas?
Yes, amazing. That's working.
Perfect. So we will basically be going through the process for in terms of like getting the financing. And then I will basically just start with the first steps when you basically plan to purchase your home. So the very first step is basically a mortgage pre-approval. Like Thomas said, in a mortgage pre-approval, you try to reach out to a lender before start looking for properties. So just so you know how much is your capacity. And then second is obviously finding an agent. And like it is very important you work with someone who is knowledgeable like Thomas is, and someone who is actually very proactive as well. The housing market, especially in the GTA, is very, it moves very quickly. So you really need someone who is, putting their 100% time and to make sure that your agent is actually working hard. Like one of the deals me and Thomas worked was actually a few days ago, and we were working actually till midnight. That deal was also successful. We managed to win the offer for the client.
Yes,
so that's
yes.
where finding like an agent is very important. Someone who is like putting a lot of time in that. Obviously, next step is finding a home. Your agent is going to help you with that process, making sure you're finding something which will be useful for you for a few years, and it's going to meet your housing needs. Once you find something, you will be making an offer on that property. So which again comes down to working with an agent who knows the market very well, especially putting an offer in GTA market is very aggressive. We all know there are bidding wars. So you really need to sort of like do your homework in terms of your budget and how much maximum you want to go with. And once your offer is accepted, then we basically move to the final approval stage. During final approval, the bank basically does the property valuation. And that's when we sign the commitment letter and basically proceed from there. One of the additional steps you can have is a home inspection. In GTA market, it's a little bit of a different situation. A lot of the time, your agent has to, do the homework before you actually make an offer on the house just to see in terms of like the the condo management, or if you're buying like a house, how's the market around there. And then the last step is basically visiting your lawyer. That's where you will be signing all the required documents. Normally, we suggest to meet your lawyer about 5 days before the closing date, so that everything is ready, and you don't have to actually wait for the last minute. So in terms of like the first step, which is the pre-approval, so one of the benefits of getting a pre-approval is that you are able to save your rate for 120 days, which basically means that if the interest rates after your pre-approval continue to go up, we will still be able to offer you, we will still be basically able to offer you the interest rate we save for you. But if the interest rate drop, in that situation, the bank will basically offer you new rates. So it kind of like gives you a guarantee in terms of like how much is going into your interest rate going to be. And it's especially more important in a situation like this, when we have seen like in last 4 or 5 weeks, the rates, they sort of like increase, like 40 to 50 bips. So if you're planning to buy a home, it is very important to have your pre-approval done, so that you can save the interest rate.
Yeah.
Yeah.
Sorry so I have a question that I know maybe people will be thinking about. So you said right now interest rate have increased 40 bits, 40 BPS, right? So can you explain a little bit what it is and what it means?
So in terms of basically 40 bits to 50 bits is basically the interest rates for example, previously about 1.50 for a 4-year fixed. Now we are basically seeing that the interest rates have jumped to 1.99 for the same 4-year fixed term. And that basically affects significantly in terms of your monthly payments. Depending on the size of the mortgage, that can translate into a couple of $100 monthly savings. So being able to proactively save those rates can make like a huge difference for a lot of clients.
Absolutely. Thank you.
No problem. And then the second issue, which is basically is finding how much you can actually afford in terms of a mortgage amount. You can start looking and you probably find some property which is, the purchase price is about $1 million and you really like that property. But in terms of, and then you go to the bank and do your pre-approval and you only find out that the maximum mortgage you can afford is $500,000 or $600,000. So doing your homework will actually help you to, beforehand know how much is the maximum mortgage amount you will be able to qualify for. And then from there, you can look for the properties which will actually, match your budget. And that basically helps your, agent as well to find the right size, selection of homes for you. So he will be able to, focus on properties which will actually match your criteria. And trust me, and Thomas will agree that like selection of homes is sort of like, it's a very intense process. You visit a couple of properties before you like, something. So beforehand knowing what kind of property you want to go for will definitely help a lot. And obviously, it gives you a peace of mind as well. You know how much your rates are going to be, how much is your overall capacity. So you feel a little bit at peace. You feel at least few variables are, in control. So that's sort of like the main benefits for like doing the pre-approval. Now, in terms of like how much mortgage you will get qualified for, there are a couple of factors which affect that. One main factor is the down payment. How much do you plan to, put as down payment from your own savings? So the larger the down payment, it normally helps you to get a bigger mortgage as well. The second is your employment income. And in terms of employment income, if you're working full time, then normally it is very easy to, verify that income. So the process is a little bit simpler. If you are self-employed, or if it is business for self kind of income, then normally the bank will ask for couple of years of history in terms of your income. So normally they ask for notice of assessment, a T4 general, which will basically give us, an idea about in terms of your income. The third thing to basically, in terms of the qualification, is the mortgage payment affordability. So we basically have to follow some ratios which are set by RRSP, which is a regulator. One of those ratios is TDSR. And as per basically the policy, we need to make sure that the clients are not, their mortgage payment will be affordable compared to their cash flow. So you're not going for a property which will basically later on you will realize like the cash flow is actually negative. So your mortgage qualification is basically directly related to how much is the mortgage payment going to be. Then another factor is the property taxes. For condos, for example, the property taxes could be significantly lower than if you are looking for a detached home. And depending on how much is the property tax, that will directly affect your mortgage qualification. And then in addition to that is the condo fees. Normally 50% of your condo fees also go towards your, are also calculated in the TDSR ratio. So the condo fees will also directly affect your overall mortgage capacity. And the last factor is the credit history. In some situations where we are basically going for an uninsured or conventional mortgage where you're putting more than 20% down. In those situations, banks are sometimes able to make exception to TDSRs or GDSR based on your credit history. So if you have a very good credit score, that makes it, it makes a very strong case in terms of getting you approved for your required mortgage amount. So I briefly mentioned TDSR and GDSR ratios. So I'm just gonna spend a little bit more time. So it will basically help you to understand how the bank basically does the calculation for the mortgage. So one of the main things which affects these ratios is basically the mortgage payment. And the mortgage payment is counted, it's calculated using a rate set by Bank of Canada, which is right now 4.79. So if that rate basically changes, then your overall capacity changes as well. There were some news as well today that that rate, which is 4.79 right now, RRSP, which is a regulator, they might be increasing that rate to 5.25% in coming months. Obviously, this is just news right now, so we don't know if that will actually happen. But if that happens, then that will definitely affect the overall capacity.
And so for someone who, let's say, was approved previously at 700K, with the new rules that might be coming, how much would they be able to qualify now?
So the exact calculation will be a little bit tough, but I think it'll be between somewhere between $15,000 to $25,000 lower. Yeah. Or even maybe it might even be more. I think it's not as significant as what happened a couple of years ago when they introduced the stress test with 2% first time. Mm-hmm. So this time they're only increasing it by 0.5%, 50 bips, but it will still affect capacity for a lot of clients. Exactly. But this is still, as of today, it is it is just a news right now. We haven't received any guidelines from the banks, so we'll see how things turn out to be in coming days in regards to that. And then the second thing is basically the property taxes. Again, we basically take the monthly property taxes, we divide the annual amount by monthly, then we add heating on top of that. If there is any other financing that you have, like a secondary financing, for example, if you borrowed funds for the down payment, that is also incorporated into the GDSR ratios as well as the TDSR ratio. And then in the end, we also take the 50% of the condo fees if there are any condo fees. So that's basically how we do the calculation for TDSR and GDSR ratios. So one of the key things is basically the down payment. It's not easy to save down payment for buying a property, especially in GTA. So there are a few incentives offered by federal government which can help clients. So one of these is RRSP Home Buyers Plan. So under the RRSP home buyers plan, you can withdraw up to $35,000 from your RRSP without doing any without triggering any tax transaction. So normally what happens is if you withdraw any funds from your RRSP, you are supposed to pay withholding tax to the bank right at that spot. And then you basically file your taxes to CRA, and then the CRA will be able to find out if the withholding tax was less or more, and then you might have to pay more in terms of the taxes when you withdraw money from your RRSP. But when you withdraw from your RRSP under the first-time home buyers plan, you will not have to pay that taxes. You will just have to return this money back to your RRSP in 15 years. So whatever amount you withdrew from your RRSP, you will divide that by 15, and which normally becomes, sort of like an insignificant amount compared to like how much 35,000 will actually help you. So it's one of those things which you sort of like, if you can plan ahead, you can contribute to your RRSP, which will help you to save money on taxes, and then you can withdraw from your RRSP for the down payment. So here we basically have two scenarios in terms of the down payment. So in Canada, there are two kinds of mortgages. One is basically a conventional mortgage. A conventional mortgage is when you put 20% or more as down payment. A second type is a high ratio mortgage where you put minimum 5% down payment. So the difference is that when you are going for a high ratio mortgage, the bank will basically have to get default insurance on those mortgages, and the premium for those default insurance is paid by the client. So normally, if you are able to put 20% down payment, you should probably go with that option, because that means you will not have to pay the default insurance premium, which will help you to save money. Going with a conventional mortgage will also help you with probably getting a higher approval amount, because for a conventional mortgage, you can have amortization for basically up to 30 years. But with a high ratio mortgage, you can only go for an amortization of 25 years. So going with a conventional definitely helps to stretch your mortgage capacity a little bit further, and it also helps you to save on the default insurance premium. Are we good on time, Thomas? Or?
Yes, we're good. Yeah.
Okay. Perfect. So once your basically mortgage is set up, there are a couple of ways which will help you a lot to pay your mortgage off faster. And one of those is the payment frequency. So here we can basically look at, there are two frequencies. One is the monthly and the other one is a weekly payment frequency. Clients who choose to go with weekly or bi-weekly frequency, they are normally able to pay off your mortgage faster than clients who go with a monthly frequency. So if we basically look here in terms of the actual amortization, if someone is making monthly payments, it will take them about 25 years to pay off their principal. But if someone is making weekly payments, they will be able to pay off the same mortgage in 21 years and 5 months. So you are basically able to save about 3.5 years in terms of your amortization period. And in this example, it is actually saving us about $13,000. For a lot of clients, it's actually possible for them to go with weekly or even with the bi-weekly. It basically comes down to doing your cash flow planning ahead of the time. And if you can afford to go with a weekly option or with a bi-weekly option, we definitely recommend you to go with that option, because it will save you a lot in terms of the interest cost. So other than the interest rate, there are a few other costs which you should be aware of in terms of a mortgage. So number one is the appraisal. So once you find a property, the bank, they basically have to do a property appraisal to make sure the valuation of the property is aligned with the market value. So appraisal normally costs between $100 to $300. Most of the time we are able to do online appraisal, which is only $100. When the bank has to do like a property visit, that's when they do a full property appraisal, which normally costs around $300. The second factor is the legal fees. So if you work with a lawyer ahead of the time, then you will be able to know in terms of how much they will be charging you for the legal fees. The third one is a land transfer tax. That's something again where it could be a significant cost, so you should talk with your realtor ahead of the time, because a lot of clients, they basically ignore this land transfer tax, which can be significant depending on where you're purchasing the property.
Yeah.
For some of the clients, go ahead, Thomas.
Yeah, now on that note, the land transfer tax is not included in mortgage, so you need to have some cash available for that. But as a first-time home buyer, there is an incentive from the government up to 4,475 in Toronto and 4,000 in Ontario. So basically, you can get up to 8,400 as a tax incentive rebate. But if you're buying like something in the 700, you will still have land transfer tax to pay.
Exactly. And I think that's it's very important. You're working with someone who knows the area very well, so they can guide you in terms of the land transfer tax. And I think normally I reach out to Thomas when I have any questions in regards to that. So it definitely helps to work with him. The other cost is basically the mortgage default insurance premium. So in terms of the, we discussed the high ratio mortgage when the clients, they put down less than 20% down payment. So that's when you have to get a default insurance premium. The default insurance premium, it becomes part of your mortgage in a sense that if your mortgage was going to be say $300,000 and the default insurance premium was $14,000 because you put less than 20% down payment, so the bank will be able to make that $14,000 part of your overall mortgage, but it is still an additional cost which clients should pay attention to. And then the surveyor, the title insurance. So a lot of the time when bank is putting giving you any mortgage, one of the conditions they will include is a title insurance. And lastly, then we have, few other smaller expenses, including moving, or if you have to buy any new appliances, or, getting new utility connections. So it helps a lot if you sort of plan those ahead of the time. So one of the other questions which we see from clients a lot is okay, I purchased this condo, and what if 5 years down the road we want to move to a different place? We need a bigger home, or our needs change. So one of the options with a lot of the mortgage is called portable option. Portability basically gives you the option to, if for example your mortgage term was 5 years, but after 3 years you want to sell this place and you want to buy another place, a new home, then in that situation you will have the option to just port your existing mortgage to the new property. So that will basically help you with any payout penalty. So instead of breaking your existing mortgage, paying off the mortgage, paying the payout penalty to the bank, you will simply have the option to port that mortgage to a new property. Now, this is in most of the situations where you're able to do this is when you are buying and purchasing two properties within the 90 days period. But still, it can help you a lot. So in terms of your mortgage product, it is important to know if it has a portability option or not. Then the second is the portability of creditor insurance. So if you are getting the creditor insurance on your mortgage, we will discuss that briefly as well again. Then in some scenarios, you have the option to port it as well. So that is again another thing to consider in terms of when you're selecting your mortgage, whether or not your mortgage gives you that option. And the third thing is the cashback. So there are a lot of products in the market where you get a cashback with a mortgage. Again, it's just not about the cashback. You should also, consider okay, how much I will be getting the cashback and how much is my interest rate. So it will basically, if you are able to compare those two, then you are able to make a better decision in terms of is this cashback worth it or is it not? Am I paying a higher interest rate just for the cashback? Or is it actually you getting something, some value from the cashback? So one other factor where one of the other things which we normally don't see that the clients are aware about is it's basically called mortgage protection. So mortgage protection is basically when you get a mortgage, the banks, they can also offer you a product for which you will pay a premium, but it will basically cover you in any sort of like unexpected event of, life, critical illness or disability. And depending on the clients, for some of the clients, it could be it could be a very important product. You definitely pay a premium on that. So there is the associated cost with it, and it is an optional product. But during this mortgage process, it is very important for you to consider like what will I do if something unexpected happens. And there are different products in the market which can help you to protect against those situations. So it is important to have that kind of conversation ahead of the time with your advisor or with your financial advisor or with your mortgage specialist. So you kind of sort of like prepared in terms of that. So this is basically the last slide. And I just wanted to spend some time on this one because this is something very important. So this is an example of 3 different mortgage packages. Each one has different features. So if we look at, for example, the very first one, which is Scotia Value Mortgage, the interest rate for Value Mortgage will actually be lower than the Scotia, the other 2 mortgages. But in terms of the product features, you will basically also see that it is also limited. So one of the things which is important to consider is the portability. So although our very first, which is Scotia Value package, it might give you a lower interest rate, but it does not have the option to portability, which can be very helpful if you plan to sell your place and you plan to buy another place. One of the other factors is this product is not STEP eligible. So STEP is basically when you have the option to borrow again against the same property once you have more equity. So for example, if the property value is $100,000 and the mortgage balance is only $30,000, in some situations, if the product is basically set up under STEP, you will have the option to borrow again additional $50,000 without doing any income application or without doing any income verification or any credit check. So and this option is available under the 2 other programs here. Also, in terms of the prepayment option, you can basically look here that both gives you different prepayments. If you want to make additional payments on your mortgage, one option gives you 10%, the other one is basically 15%, and then the third one is the 20%. So this is basically very important in terms of what kind of mortgage you are choosing for. And it helps you a lot to, if you know your mortgage features ahead of time, then you will basically know how you will be dealing different situations. If you want to sell the property, if you need to borrow additional funds, or for example, if you want to pay off your mortgage faster. So that's basically from my side. And sorry.
Thank you so much for all the detailed information. I deal with real estate every day, but it was so technical. I had to take notes because there is some part I'm like, oh, this is interesting. So thank you so much for that.
No problem, Thomas. Yeah, I think it's very important. And I've been working in this for a while, but there are times when you see something and you're like, oh, this is something new. So there's a lot of homework when you're basically going for a mortgage. So it is important to pay attention to features and to sort of know all these details before.
Yeah, no, absolutely. So let me reopen my presentation. And now we're going to talk a little bit about the market. So first step is to get pre-approved. So let's say you're a first-time buyer, you talk to Fahid, you say, okay, you can purchase a property in the 700K. Now you can look at the market and see if there is something that makes sense for you. So I want to dig into the numbers. So let me share my screen here. Okay, perfect. So you guys should be able to see my screen. So learning about today's market. So as I was saying, a lot of information out there, and you want to be able to understand what's happening. And what indicator is the months of inventory. So basically the months of inventory show you the equilibrium between supply and demand. So the way we get the months of inventory, we take all the active listing and we divide it by the number of transactions within the same month. And to give you an idea, a balanced market is 2.5 months of inventory. And we'll look at the number, but in Toronto, we're looking at 0.77 months of inventory. So what that means is that if today there is no new listing coming into the market, it will take roughly 3 weeks for everything that is available today to sell. Once again, a balanced market is 2.5 months. So this is a very, very strong seller market. Other interesting metric is the days on market. So in today's market, any listing that is nice, no problem with the house, the marketing is nice, there is good staging, good picture, that should sell within like 7-8 days. Some condos, a couple of weeks ago, a condos pop on the market. We booked a viewing the next day at 11. It was sold the same day, 0 days on the market. They put it at 11 in the morning and it sold at 9 or 10 p.m. So days on market, one of the good indicator. Ask to sell ratio, interesting to look at. But in today's market, we're really a seller's market. So what we're seeing is a lot of bidding war. So if you don't know what bidding war is, it's the way the seller decides to sell his home. So when you're a seller, there is 2 options. The first one is to put the price that you expect or think the value is, so the market value. And usually what happens is that you will get something a little bit lower after a couple of days, maybe some back and forth, but usually it will sell for lower than the listing price. This is the strategy that is the norm on a balanced market or a buyer market, and also for the more expensive home. For anything that is below 1.5 today, as we see here, it's a seller's market. So the main strategy for seller, especially in condo, is to have a bidding war. So let's say they know that they have a condo. They know that the one above sold for 800K. So they're going to put there on the market, maybe around 700K on the market or 650, way below market value, because they want to have as many offers as possible. So they will have an offer date, usually after the weekend, usually on Monday or Tuesday, when they expect to receive offers. And a condo today can have anywhere between 5 to 15 offers at the same time. And what will happen is the seller is going to pick maybe the top 3 offer and ask them if they want to improve, and then he will accept one of the offer. So if we step back a little bit and go back to the number, so what we're looking here is that the average sales price year to date, so since January, is above 1 million. The price in Toronto is up 4.2% versus last year. And this number is including the condo. And if you look here, the condo market is still down versus last year. So if we look at the next slide here, so this is the average price from 2016. And when you look here, so this is March 2020. So this is when the first confinement happened. Like prior to that, the market was going strong, especially for January, February. And the first confinement hit and the price dropped. So remember when I told you 2.5 months balanced market? So in March, last year, the month of inventory was 1.22. The confinement was 15th of March. So this number is not too bad, but it's because a lot of transactions happened in the first 2 weeks. April, fully confined, 3.35 months of inventory. So it's very rare to see that in Toronto and the GTA, but this was a strong buyer market. Not a lot of buyer in that period. And as you can see over time, as you know, people got comfortable living with the virus. People learn that if you have a mask and the other person has a mask and you keep your social distance, most likely you're not going to get the virus. So as people get comfortable living with the vaccine, the inventory went down. And if you look, it went from 3.3 to 2.5, then 1.64, and today we are looking at 0.7. So what happened is that because the market was going down, the government tried to boost the economy. So what they did is that they lowered the interest rate. The Federal Bank of Canada to overnight rate went to, I think it was 1.5 to 0.25. And basically last year, prior to COVID, if you can get 2.7%, that was pretty good rate. Right?
Yeah,
is
anything
laughing,
below
but
3%. Yeah, for
yeah,
sure.
and we're laughing because today we know like 2%, everybody will be running away. Because today, and once again, as Farid said, like it depends on like your overall application on the market, but anywhere like around the 1.7 like is good today. And last year went at 2.7. So what happened is that the purchasing power of buyer went up. I'm going to throw like random number, but if last year you qualified for 700K, maybe this year you can qualify for 750 or 800K. And that push a lot of buyer in the market. So if you look at this number, that kind of give you a sense of what happened. And as you can see, the price went down because some seller there didn't have a choice to sell. Maybe they bought a property, they have to sell, and they sold at whatever price they can sell. So the price went down at first, but the more we went over time, the more the price went up. And every market is different. The condo market in downtown Toronto went down around like 7 to 8% from March to December. Because most of my clients went to me and say, I want to be 15 minutes from work. I want to be close to restaurant. I want to be close to my friend. But with COVID, the work is closed, offices are closed, restaurants are closed. So a lot of people move out from the condo core downtown and were looking to be further, but with more space. Maybe some people that were looking to buy a condo decided to buy a home. Some buyer that had the condo before, they sold it to get a home, to have a home office. So the price for condo went down during that period, but the price of detached went up. So let me show you here. So this is perfect. You can see my new screen, right?
Yeah.
So this is the Toronto Real Estate Board stats. And as you can see here, the detached still today is up 26.6%, semi and townhouse 17.5 and 20.7. But every house is going through the roof. The condo market is recovering. Since January, we're seeing the activity on the condo market picking up, and we are seeing the price picking up. Prior to that, the condo market went down, but you can see like it's going up, but 2.6% when the houses detached are going 26%. In terms of activity, we are looking at 100%, 103.5% more transaction today than last year. Overall, it's 97%. Like last year, we were at 8,000 transactions and we're at 15.6. So the market right now is very, very, very hot. 100% like year over year is very rare. And one of the reasons is low interest rate. People getting more confident about the end of the lockdown and the pandemic. We know that vaccination is on its way, and a lot of buyers are confident that the more vaccinated we are, the sooner the economy will reopen, and they want to take advantage of that. So now what I want to show you is different markets. So Toronto, the months of inventory is at 0.77, but in the GTA, we're looking at 0.7. So it's more competitive to buy outside Toronto than it is in Toronto. So for example, the Brampton market, the Mississauga market has even lower interest rate. So days on market, 90 days, number of sales, so we talk about that, and the average sales price year to date close to $1 million. This is crazy. The average increase over the last 20 years was 6.7% year over year. And in the GTA this year, we're looking at 18%. So we are basically looking at close more than twice the average in terms of appreciation. So I will tell you that the condo market went down until December. So now that the market is recovering for the condo segment, as buyer, if you're looking at condo, there is some opportunity there because the market went down. I think the market bottomed up and it's recovering. But I'll tell you, if you're looking to buy a house, like a detached house today, there is a chance that we're going to see either a slowdown or a change in the market in the next couple of weeks, months. On this note, on the 19th of April, the government is going to release its federal budget, and there is talk on the street that there might be some new regulation, one form or another, to kind of like pace the real estate market. Nobody wants to see like a bubble, and nobody wants to see a bubble that pops. And when you're looking at price that go up on average 18%, this is a more risky situation for houses than it is if the market was 7%. So let me go to this one here. So it's kind of give you a sense of what happened in the past couple of years. And Toronto is growing like crazy, and the price of real estate is going through the roof. And a lot of clients, when they buy a property, as soon as they sign a contract, they have what we call buyer remorse. They're like, hey, Thomas, do you think I overpaid for this property? And my answer is that if you plan on keeping real estate as a long-term asset, if you don't plan on buying it and reselling it in the next 2 years, the price, I am confident that the price are going to increase. And nobody can really predict the future, right? Nobody has a crystal ball, but what we can do is look at the past and look at where we are now. And if you look in 2016, the average price in the GTA was at close to 700,000. And right now we're close to 1.1 million. Let that sink for a second. If you buy a condo in 2016 and you bought it like an average condo or an average house, if you're further from Toronto, and you bought it at let's say 700K today without doing anything, no reno, nothing, you can probably get 1.1 million. Like we're talking about 400,000 over 5 years. This is the perfect example to show you how real estate could really be a way for home buyer to build wealth. And as you can see here, so in 2017, we've seen a correction. If we go back a little here, so this is where we've seen the market went up like crazy and went down. At this point, we've seen a price increase by 30%. So the situation that we're seeing right now is kind of similar, but not exactly the same. We have learned from this period, and when I say we, I mean like the government as well, and they implemented like a housing plan to make sure there were no bubble. But you can see like the price went up very high and went down very, very abruptly. And it took a couple of years to get back to the highest point of 2017. And once again, like if you're a buyer today for houses, be mindful because the way the appreciation went, don't forget the average is 6.7%. If you're going way higher than the average, there is a risk that either it's going to the negative, or at least it stagnate and slow down. The market is never going to be like a straight line. It's going to be up and down. And if you buy and hold real estate on the long term, that's the best way for you to secure it as a good investment. But I will be mindful if you're buying a very expensive home today. If you're a seller today, this is a very good time because we don't know what can happen. So now I kind of want to go into making an offer. So now you understand how to get finance. You talk to Faid and you got your pre-approval. Now you come to me and you want to do showing. So you know you can look into property that's sold in the 700. So you want to see some. So I can give you access to a collab, which allow you to see all the listing on the MLS and create a list of property you want to see. And then we can maybe book like 3 or 4 property and look at them. So the first thing I will say is don't be fooled by first impression. If there is like pink paint on the wall, maybe you'll be like, oh, I don't want to live there. But maybe other buyer will think the same way. And repainting a condo or a house is not that expensive, especially since if it looks bad, you can probably buy it for less than an equivalent home on the market. And now let's say we've seen a couple of property, you got your pre-approval and you want to make an offer. So how does that work? So what I will do is that I will make a comprehensive market analysis. So I would look at comparable unit that sold within the same building or within the same neighborhood to tell you what's the market value. Then I will present an offer. I will negotiate it for you, and let's look at the offer. So when you make an offer, there is 3 scenarios. Either it's accepted right away, it's countered, or it's rejected. Let's say we make an offer in a bidding war scenario. So we make an offer, there is, let's say 9 other offers, so 10 offers. So in that scenario, the seller is going to be willing to accept an offer that is firm. So as Fahid was saying, when you make an offer, usually it's conditional on either the status review, if you're in a condo. So the status in a condo, it's basically the financial statement of the condominium. If you're looking to buy a house, usually you make it conditional on an inspection. The other condition is the financing. So the goal of being pre-approved before is to make sure that you can get finance for the property that you put an offer in. So let's say you got pre-approved, you say, hey, Fahid, I want to make an offer just to make sure this property is good. Fahid say, yeah, that's good, no problem. So we can remove the financing condition. Let's say we review the status by your lawyer prior to making an offer. We can remove the status, or if it's a house, you can do the inspection before making an offer, and we can remove that. So if you have a firm offer, it's way stronger than if it's conditional. Now you have a firm offer. The other point where you can negotiate and that doesn't cost you money could be the closing date. Obviously, at the end of the day, money talks. If the other next best offer is 20K more, most likely they're going to accept it. But let's say there is 2 offers that have the same price, no condition, and one closes in 30 days, the other one in 60 days. Being able to close sooner is most of the time a very good feature for an offer for the seller. So if you can close sooner, that's better. Something that can help if you're a buyer, you can make a nice presentation letter. So picture of you, picture of your partner if you have one, and say, hey, Mr. Owner, I really like your home. Please see my offer. Hopefully you'll accept us, just to make your application like more humane. What happens when you have an offer date is they will review all offer at once. So let's say they say offer date on Monday at 6 p.m. So the listing agent will talk with the owner and will go over the 10 offer and select the one they prefer. Let's say you make a firm offer, it's accepted. So perfect, congratulations, know what happened. So as Fahid was saying, you need to have a lawyer, and Basically, you will need to talk to your mortgage broker and talk to your lawyer to tell them, hey, I've closed on this property. This is the agreement of purchase and sale. And they will be able to make the transfer between the title from the seller to the buyer and also from the mortgage. So decisive item, we talk about that, and closing day. So usually they will give you the key the day on the closing. Usually it's in the afternoon. In the morning, they will make sure that everything is good. And in the morning, they will give you the key. So once you have the key, I would recommend to quickly look at the house, make sure all the appliances are working, that's in the same condition as when you saw it. And yeah, so we do offer a complimentary how do you call it, move snap, so to facilitate your moving. So it's a virtual concierge that helps you set up your new address, so with the government, for your driving license, for your healthcare, for your bank. So it's basically an online virtual concierge that helps you do all of that at once. Yeah, so feel free to check our review. And that's close to 8 p.m. So perfect. We are very good on time. So I'm going to stop sharing my screen. Perfect. And yeah, so we're close to 8. I want to be mindful of everyone's time. I know everybody's busy. I know it's late. So yeah, I want to see if you guys have any questions for us. If you do, feel free to leave it in the comment. But if not, I just want to say thank you, Guy, for attending. To be honest, it's a lot of information that we try to compress into a 1-hour webinar.
Sorry, Thomas. Yeah. I think there are a couple of questions in the chat. So maybe
yeah, perfect. Yeah, yeah, perfect. I don't see them, but if you can read them, that would be perfect.
Sure. So I think one question Neda asked is, would any of the requirements change if you're trying to take a mortgage for a purchase of a home in US? Yes, basically everything changes. So whatever we talk today is basically for a property you are going to purchase in Canada. So any property which is not located in Canada, I think there are very few lenders, if there are any in Canada, who will be financing. Because from the bank's perspective, it becomes a big risk for them to do any kind of property valuation or to put any kind of lien on those properties which are not located in Canada. And the other, the second question is, in case the home inspection happens after the final approval, does it to mean that the purchase is conditional upon the results of home inspection?
Yeah. So, you want to take this one?
Yeah, I can just add something. So from the bank's perspective, home inspection is we basically look at the valuation of the home, which is a different thing than the home inspection. Home inspection is when you actually hire someone professional who will go in and to make sure like everything is working perfectly fine as per the purchase agreement. The valuation is the part which we do in terms of to make sure like whatever is the purchase price, it is aligned with the market value. So that's basically the process for that could be done online. We pretty much able to do it, like in most of the situations, we are able to do it, in a couple of hours. Sometimes someone needs to go in person. So that's when it can take longer. And so that's sort of like,
and for the home inspection, so let's say you want to buy a home, the home inspection will be like a certified inspector that is going to tell you if there is any structural issue. And for a buyer perspective, usually it's done before making an offer. Because once you make an offer and the offer is accepted, the deal is firm. And if you do the inspection after and they find like there is a leak in the roof, it's too late to go back on the deal. So if you want to do a home inspection, it has to be prior to like having a firm deal. And yeah, so I want to emphasize on what Faid said. So when you get your pre-approval, like usually it always goes through, but what the bank wants to avoid is, let's say you buy a condo for 900 and all the similar one sold for 700. So that would be a little bit fishy, and that's when the bank would be, wait a second, like this doesn't make sense, and this is why we need to have a look at that. Perfect. So yeah, I hope we answered both your questions, Christelle and Neta. Let me see. No. Oh yeah, a question for you, Faith. So usually, how long does it take to be pre-approved, like in a normal situation?
So normally it takes only about 2 to 3 days if we don't run into any issue. Sometimes it can be even faster. Last few weeks were like quite busy, so that's when it was actually taking longer. But normally, yeah, the process takes only 2 to 3 weeks.
Yeah,
exactly.
And I'm probably stating the obvious, but getting pre-approved is free, right? So
exactly.
if you're not sure, maybe you want to buy today, maybe you want to buy in 6 months, still worth it to get pre-approved today and take it from there.
Exactly.
Perfect. So yeah, there is no more questions. So thank you everybody for attending. Once again, knowledge is power. The more you know, the better you will be when you're ready to make a decision. So I hope you find that useful. If you have any question, feel free to reach out to me or to Faith directly. Thank you again for attending, and I wish you a great Thursday. Friday is coming soon. It's great outside, so enjoy the nice weather. Take care, everybody. Thank you, Faith, for
Thank you, everybody.
coming.
No problem.
Bye.
Thanks for having me. Take care. Bye.